back into the body of where I first saw this, back into the body of this big skyscraper here, and we end up with a push up in volume and it closes lower. So my analysis here would be that we have a sign of reversal here, right? I have a weakness in the background. I have ultra high volume here, an effort, a failed effort to be up here. I'm going to guess if this stays like this, the volume keeps going down, they're not interested in the higher prices. This is probably where they're going to hover again, and then it's going to fail.
Well, I have to give a 10 out of 10 for that. It's spot on, absolutely spot on. You give her a round of applause, and she's only been doing this for a few, what, how many, 8 weeks, 10 weeks? About 10 weeks. Okay, now, Lauren's absolutely spot on, okay? Okay, yeah, no, it's today, this is yesterday's bar. This is a weekly chart, just so you know. We can now actually go and actually have a look at what the actual market did today. The reason this is actual today's chart, okay, using the Infinity AT platform. Now, this was a beautiful example of an upthrust right here this morning. Now, if we were going to, and they're upthrusting, and this is the daily chart. This is an upthrust on the daily. You saw it on the weekly. The weekly chart showed you a climactic bar. This shows me the upthrust, okay, and it's hidden because it's in the body of the bar behind it. But this is why I went on YouTube and actually forecast the decline in gold. Now, I did say we'd get down to 1600 and find support, and that's exactly what has happened. But there's still weakness around, okay? What I'm expecting this market to do is to come back down and retest 1600. Once it takes 1600 out, and if that weekly chart that we just analysed there, if that weekly chart stayed exactly like that, and I can't analyse that bar yet, but if it stayed like that at this prior level, on that volume, gold is going all the way to 1400, possibly to 1000. And it's going to be a fun ride down if you're a VSA club member. Because, yep, and so Lauren, she's getting really, now look, she's telling me to go back to the other chart now. Oh my goodness, what have we got here? Go on then. Here.
Sorry, we have to keep passing the headset back. So if you notice here, here's your hidden upthrust, right? But this is the part that concerns me or makes me pay attention. You have ultra high volume here. It's actually broken through a previous low way back here. It's broken through. It's broken through the body of this last climactic action bar that we saw. It drifts up, but you're in an overall downtrend. So it's sort of contrarian, right? It goes up, it kind of whipsaws, and then the volume keeps going down. So again, I'm looking for your confirmation here, and then this is where it's through previous support, and I'm going to look for basically no demands, and then it's going to fail.
And that's pretty much exactly what I said on YouTube, that we'd reach the 1600 level, we'd find support, which we have, and if it just keeps going up on no demand, we will see gold start. And this could happen as well. If we now start to begin a rally in the S&P, remember, all the news is bad, but the S&P has rallied massively. Why? Because the market will do the very opposite of what you think it's going to do. It's devious. It's designed that way. So always remember, don't spend too much time focusing on what the media are telling you, because what you're hearing and seeing is affecting your judgment of the chart. Climbs the wall of worry. That's right, Steve. Well, you know, the S&P is at a very important level now, and it's been trading in a range. Now let me show you, let me finish on this. And we're going to talk about this in the VSA Club on Friday, because I've framed out over the last few weeks a trading range, okay, and we're right up at my trading range. Now, why did the market rally back up here? Okay, because we've had a test yesterday, and it's gone back up here and closed right on. Look at it, right where. Now, VSA Club members, just confirm, can you, if you can just type it in. I know everyone can't see it, but this level has been in existence. Literally, I've had that price level for the last 8 weeks in the closing bell. You've all seen it. Okay, so just realise why I've had that there. Yep, says Rusty, good. The reason is, look, there, back on August, was their first phase of accumulation. Right, that's where the professional money were positioning themselves at this level. So they started to buy here, not sell. We come back down into that area, and this time we note that the volume is less than the volume here, and the market responds positively. Back up it goes. Notice now we come back into the area here, back down there again, and we spring. This is called a spring. And the volume's lower. So I'm hoping, I really think this will happen. We'll get another shakeout, another opportunity to push this price back down, and then we're going to see no supply pile in and buy if we see that, because there is going to be massive opportunity to the upside. Now, at the moment, we're right back up to an area here, which is going to act as very serious resistance, and you can see it already has. The fact that we've closed in the middle today, which we have, would tell me that we should probably have a down day tomorrow. And if we do start a down day, we could easily push back into this downtrend channel. We are definitely in a downtrend in the market, but we're trying to build a cause here and here to move higher. Now, if we take out that no demand bar, the next target's going to be back up to 1300, and that's going to be a nice ride up there. The downtrend is because we've taken the first two highs, Rusty, the intersecting low on this chart, and that's the current trend that's in place. But to be fair, I don't even want to call this a trend. This is actually a trading range. It's not even a trend. We're in a trading range, as you can see. It's a bit like when we reach this top, you go into trading ranges. But what I do know, and what everyone should know, is there's a lot of high volume down here. Why? The professionals are putting their footprints on the chart. And if we then go to the weekly chart and we wonder why that is, does everybody remember what happened in May of last year? You remember that? Right here. Right there. Anybody tell me what happened on that week? 7th of May. Wasn't Greece? No? Aha, you've got something wrong today. No? Anybody tell me what happened on the 7th of May? Actually, it was the 6th of May last year, and it's in control of this market right now. It was the flash crash. Look, they shook the market out violently here. They tested it a few weeks later. In fact, that's actually just strength buying, more buying coming in. So there's a lot of buyers down there. Look at the volume on this bar. It's the highest we've seen. Now, the reason, and that was all to do with the downgrading of the US government, the credit rating, okay? But look, when we come back into the body of the bar here, we get a nice positive response. And we come right back down to that line. That green line is the shakeout. And we see accumulation. I expect one more or two more visits down here, and we'll follow it in the club, and suddenly we can start to rush in and buy. What I'd like to see, my preference, this would be my preference, would be to see some sort of widespread down bar on news. Something like the banking crisis in England or in Europe has caused the euro to be disbanded. That would cause this market to crash, and that's when you buy it. That's when you would, everyone else would be negative, you would buy it. And in 5 years' time, you'd say, Gavin, thank you very much indeed, as you bought, if you bought stocks down there that are perfectly good stocks, you know, Apple, still a great stock. There's certain stocks I wouldn't want to be buying right now. Certainly Bank of America doesn't appeal to me very much for many reasons. But this is a very clear chart. It's accumulation going on at this level. And we're right at, in case you didn't notice, at this 50% level here at 1096, 1100. That is a 50% Fibonacci retracement of the trend from down here and the old high. So we've had this nice uptrend that's been in place for a long time. Now we've got some selling going on up at the top, and it's being reaccumulated down here. And that's why you're having these volatile days. You've got the VIX at the moment, which is very volatile. That's exactly how the markets work, which is why as traders, you should be rubbing your hands with glee, and you should be trying to get into this market, because you only have to catch one good trade, and you can make 10 or 15 points in the S&P at the moment. Now, 3 or 4 years ago, you'd be lucky if you got 2 or 3 points. Volatility is our friends, ladies and gentlemen. It's our friend. Volatility means that we can, if you can read VSA and you can understand the chart, then you can see what's going on. So let me leave you with this final thought. We're going to do a scan, and this is the end of day software that we did with our special offer, and it's got the data from Reuters, and we're going to just do a scan now, and we're going to look for 20 indicators. And what we're going to look for here, we're going to scan this time the Here it is, S&P. Okay. Click on next. Now we'll just call this S&P. Right, let me see if anybody knows what we're actually looking for here. Can anyone tell me with the scan? Randy says, good presentation, Lauren and Gavin. Keep up the good work. Good. Yes, you can. Bill, you can have fib numbers in Trade Guide. I use them all the time. So what we're going to be looking for here. Well done, Brian. Brian's got it. We're going to be looking for stocks to buy. Yes. Relative strength as well, Steve. That's another scan. This scan that I'm doing now, I'm going to be looking for signs of accumulation. I'm going to be looking for lots of green indicators at the right of the chart. Okay, now it's going to take some time to do this, but we've got about another 5 minutes, so we're fine. So what the software is doing now is it's going through the data, which I downloaded today from Reuters, and what it's going to do, by the way, their volume data is absolutely superb. Superb. Tom's using it, Philip's using it, I'm using it. Very, very accurate data. So you really do get some very clear indications. So we're going to look for clusters of indicators at the right edge of the chart. And then if we do a stock scan, if I've got time to do it, I'm going to see if any stocks come up where I've got a cluster of indicators. And if the stock is acting stronger than the index, that means as the index has been falling, if certain stocks like Apple haven't fallen as fast, they're the ones we're going to go and rush in and buy. And for all of you that bought the end of day software, and I know there's probably about 60 of you in here that have this last week, because that was a very good offer that we did, I'm going to do a special webinar for you next week, and it's going to be entitled How to Pick Stocks Ready to Buy Now. Okay, so that's for all of you that, all our customers will come anyway if you're a VSA Club member, but this is a public event, and we're going to do a 2-hour webinar, and we're going to show you how to correctly identify stocks that are going to make a move. And if you're an options trader, you don't want to miss that, because I like trading options myself, and there's some really good opportunities on a few calls that I've identified, and we'll talk about those next week. It's Thomson Reuters, Rusty, and I know you're a customer. It's free for 2 months. The data comes with that package. It's free for 2 months. And if you're an existing Trade Guide customer, it's also free for 2 months. You can sign up from our website. Okay. And I didn't know that, Fiona. I'm going to have to check into that. My understanding was that you get 2 months for free, but I'll go and check. That's definitely still my understanding. Asim, it's going to be a VSA Club event for VSA Club members and for anyone that's bought the software. Oh, okay, maybe different because of the Australian deal. Okay, yeah, well, I'll need to check that. And Danilo says, Gavin, sure will be. Netflix and Apple today looked like they were being accumulated. Yep. Jeff says, I know you like Apple, Gavin. Trade Guide works on a Mac, Jeff. Works on a Mac right now. You've got it working on you on Army has it. Yeah, we got Trade Guide working for Mac. We just use VMware. Okay, so they charge you for 1 month, and the second and third are free. Okay, that's reasonable. That's fair enough. Great. Please do the webinar any day but Tuesday. Okay, Isadora, I can manage that. Does it work with Metastock data? Yes, Mahan, this will work with any Metastock data feed. Doesn't just have to be Reuters. After the 2 months data free, how much does it cost? Miguel, I think it's 25 bucks. Yeah, it's not a lot of money. Very reasonable. TR says, hello TR, can you explain what the red-green indicator on the far right side of the chart is representing? You mean this thing here? That there. That is actually a volume thermometer, and it's going to be measuring actually, when we get a chart up, TR, let me show you it. I'll show you how it works. It's a very clever little tool to measure the energy in the market. The market is made up of energy, okay? And we're looking for bullish or bearish energy. And if it's bullish energy, we want to be buying, obviously. At the moment, there's a lot of energy building to the bullish side. But remember, professionals buy at lower prices, which is why I'm waiting for this big shakeout to come. Danilo, yeah, let me do that while this trade is going. We are going to put a link up into the live trading room for tomorrow. It's free. There is no charge for this room. And it's on our events page, tradegutter.com. On our events Oh, it's on the events page apparently, but I'll just put the link up anyway for those of you that want to go and have a look. Wow, we got hundreds of people registered for that. Look at that. That's good. Okay, so let's put this in here now for you. I'm going to put this in the chat window. Can you all see that? That's a link for tomorrow's live trading event. You remember, Daniela? Okay, perfect. Doug, the Reuters data feed, I have to say from my perspective, has been, the volume data has been, I'm not saying that real-time data isn't, it's good as well. They're both good. I think Reuters is about the same price, but you get 2 months for free. That's the major benefit of it. If you can convert your interactive brokers data to Metastock data, Jay, then the answer is yes. But this is why we're doing 2 months free with Reuters. No, you own the software for life with that special offer. I put a link up in the room. If you order from there, it's not a leasing option. You're actually buying the program, and you'll get version 5 of Trade Guider when we release that next year at no additional charge. Okay, we won't charge you an upgrade fee. And there's a lot of new features that are coming in that program as we build it. Okay, so let's just, this is nearly finished now. Yeah, I can run over it again very, very quickly. Yeah, just before we get to the chart here, because this scan's looking quite interesting. This is what the offer is. It's basically, it's not a lease. No, this is not a lease offer. This is an offer to buy. That you will own the program. We only lease it off our website. We did this as a special for Columbus Day. We're extending it today by another 12 hours, mainly because it was so popular. It's been, wasn't it, our most popular thing we've ever done. So you actually get the software lifetime ownership. That usually sells on our site for $1,500 per year. You get the training course, okay, which teaches you how to use the software. You get the chart reading masterclass, which has a value of $995, and you get a printed copy and a signed copy of my book at $149. That's what it would be sold at separately, and we're doing. And now the other thing that's not on here, which should be,